Joining me now for a look at the equity scene is Viv Govender from Rand Swiss Offshore. Viv, thanks so much for joining us this afternoon. So Trump making headlines yet again. This time around, he plans to introduce tariffs of 25% on aluminium and steel imports. I was looking at markets as we just went through those boards. European markets are in the green. The JSE really in the green with the financial 15, the one that's under pressure. Asian markets were pretty mixed, but also mostly in positive territory. We also look at those US futures also in the green. Are markets really shrugging off this recent announcement?
Yes, to a certain extent. I think when it comes to the Trump presidency, there's two parts to it. There's a part that Trump runs, and there's a part that basically people like Elon Musk are involved in. The stuff that Trump runs is the stuff around tariffs, etc., and buying Greenland or invading Panama. And those things I think you can take with a huge pinch of salt because historically, as you've seen in the past, Trump hasn't really been able to push through these major big things that he wants to. And whenever he's been seen to have any pushback at all, he's usually folded. The example I give was what happened with Canada and Mexico, where he announced massive tariffs even larger than what he was going to put against China. And in both cases, basically they gave him the same deal they gave Biden with some small, minor, concessions, and he basically reversed both those tariff demands. On the other hand, the stuff like for instance, Elon Musk is doing, like taking on USAID or USAID, or going after the Department of Education, and those kind of things, I think will have a far greater chance of having an impact. But unfortunately, that doesn't really affect the economy at the moment.
Let's move over to those jobs numbers that were out last week, Friday. The labor market really resilient, right? But the numbers came in below expectations. The economy adding 143,000 jobs. Expectations were for 170,000. On the upside, unemployment dipped to 4% from 4.1%. Despite last month's print, as I said, that labor market really strong.
Yeah, look, I mean, obviously, when it comes to these job numbers, understand that there's obviously going to be some impact as well through weather events and other events in the US. Remember, we had the fire situation and those kind of things happening, in the US. Those things do affect, I don't think it affects this particular one, but I think the fire stuff will affect, some jobs numbers going forward. These are temporary measures that I think will have an impact. And almost 30,000 in a place like the US is almost a rounding error. So I do think that, it is basically showing that the US labor market looks reasonably stable. And in that environment, you're not going to be as willing to try and cut interest rates, especially in the face of, inflation remaining reasonably high, as you would have been otherwise. And we would like to see a far weaker jobs number in order to get those interest rate chances on the high.
And that was my next question around just the Fed's monetary policy moving forward and whether this print does anything to your projections, or would you rather wait to see the inflation number that's coming out on Wednesday?
I like to see the inflation numbers, and I don't just want to see one, I just want to see a few come through, because obviously the Fed is not going to move in 1 month or, just for a couple of months. It's going to be, if they want to continue cutting interest rates, they'll be cutting it over a period that's going to be measured closer to a year. And I do think that's going to be important, obviously important reading, but it's not the, be all and end all. That being said, I think some of the fears, if I mentioned, go back to our previous point around Trump and tariffs, some of the fears around tariffs might, be alleviated by what's been happening, and it might make the Fed more amenable to cutting interest rates. And the reason I want to say interest rate cuts are good, not just because of the stock market, but also we need the Fed to start cutting in order for the South African Reserve Bank to also have the freedom to cut as well. And, we definitely do need lower interest rates than we have right now. But unfortunately, if we do try and cut, well, the Fed is not going to. We might be seeing, the round weaken, which might be bad for inflation going forward.
Let's move over to some company news. Telkom out with a third quarter update. The mobile unit proving to be strong. Service revenue on that front up 9.6%. The last time I checked Telkom's share price, it was up just under 7%. Seems like markets are really liking those numbers.
Oh, yeah, most certainly. Look, this is basically the biggest move of the day. I think we are seeing basically, some kind of improvements coming through with the mobile sector, like you mentioned. They are talking about data as being, really good for them as well. I think data is obviously going to be something that is going to be more important going forward. If we look at some of the AI stuff coming around, especially the newer stuff, not the old stuff that we used to see in the past, we might be seeing a bit more, towards connectivity around things like driverless vehicles and so on. that kind of mobile connectivity could be important. And I do think that that's a future where we're going to see data be a far more important part of the telecom space than it even has been currently. And as I mentioned, it already is a big chunk of it. Voice communications, which used to be the staple for telecom, has kind of fallen away quite sharply over the last few years.
Then over in the mining sector, Pan-African Resources also up with an update. Those headline earnings per share, they're warning that it could be down up to 49%. Quite a shocker on that front, considering where the gold price is at and just looking at what some of its peers' as updates look like.
Yeah, and this is for a stock price that's up, over 100% in the last year. So yeah, the market is basically not looking at this pretty positively. We see a sharp pullback in the share price. Look, I do think that when it comes to these companies here, they are pretty much they take the commodity price as given. No gold miner has the ability to influence the price of their commodity to any extent whatsoever. And I do think that at the moment the gold price at 2,900 plus actually is what's saving some of these mines out there who are experiencing some difficulties. I do think that the gold price probably has some support going forward. We talked about the issues between China and the US.
Yeah.
One of the things the US does have is this reserve currency status. This means that everyone in the world that has dealings with the world wants to have some US dollars in their account in case they want to do some transactions. However, if the US and China, for instance, are going to be having trouble going forward, the Chinese might want to replace some of those US dollar holdings with some gold holdings, which might be very positive for the gold price.
All right, let's hit pause on that conversation, Viv. Before we get to your stock pick, let's reflect on some counters that have found favor with your industry peers.
My stock pick this week is Renet. That's RNI. That's that vehicle that the Ruperts have. You see, every so often you pick an event-driven model. So effectively what they've done is they've sold their BAT shares. So that company only has cash, maybe about 30% of its market cap, and Pension Corp, which is actually quite a solid business. I think over the next 12 months, they'll do something with that cash. What they've shown is that they're conservative and they tend to do really good deals. So either you as a shareholder will get it as cash, or you'll get a bigger shareholding in Pension Corp, or you'll get another more interesting investment there. So I think there's opportunity there for where the valuation is right now, the outlook and the quality of management.
One we've chatted about before. We spoke about expensive US tech, and so what you can get here as an investor is very what I would argue is cheap tech, and that comes out of China. There's an ETF that encapsulates the China internet, KWeb, and here you're getting a basket of tech shares that are looking very unloved, but doing incredible things. And with the AI race really heating up, DeepSeek, Alibaba, and a number of others are launching really credible alternatives. And yeah, I think it's a nice way for investors to get exposure to that sector.
All right, Viv, so Rainet and the Crane shares, a China Internet ETF, a play on, Chinese tech stocks. What are your views on those picks?
Well, Rainet, the discount obviously makes it attractive, so that could be a play out there. Obviously, depending on what the company wants to do going forward, because there's, like I said, there is variability in terms of all options open to them, in terms of what they could do with the cash and so on. With regards to China, I would take that Trump might be more positive for China than versus the Biden administration had been. Trump always wants to make a deal. He doesn't want to see real conflict. And you've seen the past where he's been strongly in conflict in some place, and then suddenly turns around and they're suddenly the best of friends. And so I do think that the Chinese understand this to a certain extent, and if they're willing to basically play ball with certain things, for instance, recently we saw Trump through investments by the Japanese into U.S. steel, which had been scuppered by the Biden administration. I think the Chinese could have a deal on the go there as well. Just look at TikTok and what's he's making available there. So I do think the Chinese internet companies are interesting, and we've just seen in the last couple of weeks that the Chinese still have the capacity to innovate in ways that are comparable to the US, and they're pretty much the only ones in the world that are comparable to the US right now in terms of the ability to innovate, especially things like AI. And so yeah, I think that's not a bad place to put some money in the Chinese tech companies.
Viv, trade aside, when it comes to China, how concerned are you about that growth story as we're in 2025, the growth story, the consumption story as well?
Look, I've always argued, and basically ever since GE basically became de facto leader for life in China. I've argued that it's a bad move. You don't find many people in their 70s that get better year after year. And if you are leader for life, I mean, just look up north with Dr. Mugabe, what happens, near the end. It's not great to have, a person in charge that's older and basically can't be removed. And he's had moves in the last, several years that have been obviously negative for that country. The fear I have is not so much around growth, and obviously it is a fear, but the real fear around China is the danger of a serious conflict, a hot war, involving something like Taiwan. And in which case, because we will have to choose sides at that point in time. And I'm pretty sure that we'll probably go on the side of the US, because, pretty much most of the stuff that, our elites want by US involved, it'll be a similar situation to what happened with Russia, in which assets in Russia are going to be, negatively valued, or basically valued at zero, because of the fact that, you just can't access them or get the value out of them. And so I think that is the real danger around China. The growth story obviously is a problem, but I think they must not discount the fact that there is a possibility of some serious conflict. And in that case, I think Chinese assets would be basically significantly discounted.
All right. Before I let you go, what are you hanging your hat on today? What's your stock pick?
It's going to be called Micron. They make what's called high bandwidth memory. And the reason I put that out there is that people may not realize it, but for NVIDIA, this is the world's most valuable company, or was until a couple of weeks ago. Basically, it's they spend more money on that company than they do on a company called TSMC, which makes the chips. But they waste more money on memory than they do on the chip manufacturing. The company they spend money on is SK Hynix, which is a South Korean, maker of this high bandwidth memory. There's only two companies, actually three companies that make it. That's the SK Hynix, there's Samsung, which kind of plays around, and there's Micron. I think Micron hasn't really followed the path up, and I think with some of the new technological movements happening around AI, the demand for memory because of the context window requirements will be higher, and I think Micron should benefit from that going forward.
All right. Viv, thanks so much for joining us today. That was Viv Govender from Rand Swiss Offshore.